The possibility is making me salivate. My opinion on the market as it is right now. Investors with the long view will benefit greatly from this, in my opinion. I believe your framing is spot on. All these downsides generated by short-term liquidity are here. Here is the distribution from Mt. Gox. One example is the $3 billion worth of Bitcoin held by the German government. The price of Bitcoin has dropped as a result of the US government's plan to dump $12 billion worth of the cryptocurrency onto the market. As always with crypto, happening during a week with little liquidity, which causes futures positions to bubble up, which in turn causes liquidations to cascade and so on. But these things only happen sometimes, right? Bitcoin will always be sent out once by Mt. Gox. The United States government will only ever sell the Silk Road Bitcoin once. We have these enormous catalysts for the long term to counteract these rare, transient occurrences. The exchange traded funds ETFs are here to sequester assets for the foreseeable future. Institutions are beginning to accept Bitcoin. It seems like Washington is shifting its stance on cryptocurrency, going from being strongly against it to being neutral or even strongly in favor of it. I am looking forward to the second half of the year with great anticipation because I believe that once we overcome these short-term headwinds, the market will experience a historically bullish run. The short-term ups and downs are inevitable given the nature of cryptocurrency, but we can be assured that the underlying trends will remain strong in the long run. The next two behavioral cliffs, the all-time buy level and the $100,000 level, will be reached soon, and I think it's very obvious that people will start selling at those points. I don't see Bitcoin ever settling below $250,000 after it reaches that level. The latest crypto price drop has sent amateur investors and newbies to the market into a panic, while the smart money and experienced investors are grabbing the opportunity to acquire as much as they can. The chief investment officer of Bitwise, Matt Hougan, revealed this insight in my most recent discussion with him. For the complete interview, which was uploaded on Crypto Nutshell, you can access it by clicking on the first link in the description below. Discussing the current crypto market fall, Matt Hougan explains why investors might consider buying during this period in the interview. And he expresses his conviction that throughout this cycle, Bitcoin's price would be driven to $250,000 a coin by institutions. Bitwise is the sixth biggest Bitcoin ETF issuer, with over $2 billion in Bitcoin, in case you didn't know. Matt Hougan possesses unmatched knowledge in the realms of institutional investing in cryptocurrency in his role as Chief Investment Officer. That amount is easily attainable through extrapolation. These are Bitcoin ETFs. This can be much simpler than it appears due to the exceptional quality of these ETFs. As an aside, the biggest gold ETF costs 50 basis points, while our ETF charges just 20 basis points. This is a fantastic offer. There are further service providers in that area as well. These items are excellent. In my opinion, getting to that figure is not hard at all. Putting a price on anything is a combination of art and science, with the art probably playing a larger role. In my opinion, the price returns and trading patterns of Bitcoin over time reveal, at the very least, the patterns observed since the ETF's introduction. Net ETF flows have been found to consume over 100% of the Bitcoin that has ever been generated. That means those looking to sell Bitcoin already have to sell to the ETFs. Additionally, you can see the average selling price of coins over time and the average age of the coins themselves. The next two behavioral cliffs, the all-time buy and the $100,000 threshold, will be reached soon, and I think it's very obvious that people will start selling at that point. I don't see Bitcoin ever slowing its ascent until it reaches the $250,000 mark, after which it will likely hit yet another behavioral wall. Also, if you believe in Bitcoin's 4-year cycle, it's a safe bet to think you'll reach a price 3 or 4 times higher than last year or lower. I can't say for sure. In order to deny the possibility of reaching these levels, one must essentially believe that either the past is not representative of the future or that the future will not resemble the past. We can observe it reaching 250,000. Maybe it will get higher. It may drop a bit more. If I were an investor, I wouldn't put my money on a single number, but if you're a pundit, you have to. I think that's a fair price, and I believe we will succeed. Those are the 3 most significant groupings at the moment. Consequently, retail investors constitute a sizable portion of the market. Typically, these entities are involved in trading methods like hedge funds. Institutions, family offices, or financial advisors that are looking to invest for the long haul are examples of this type of investor. Those first 2 categories had the most participants in the early going, perhaps even in the first few weeks. Those 2 were the swiftest. Anytime a hedge fund wants to invest, they can do it the very next day. Any day now, regular people can make the decision to invest, and tomorrow they will. It takes more time for the expert investors who think in the long run. They conduct an investigation. They evaluate similar items side by side. They have conversations with their customers and follow a procedure. To cut to the chase based on what I can see in the numbers. Retail and hedge funds were the primary forces at work. While one set of institutional investors is taking its time to finish due diligence, another set of long-term buy-and-hold investors has accelerated significantly in recent months. That, in my opinion, will be the largest category moving ahead. I believe next year's inflows will be higher than this year's because that group is just gaining momentum and growing at an exponential rate. So these two categories come first, but the long-term institutions are rapidly following. What is the typical trajectory of capital flows within the context of ETFs as a whole? Do many of them reach a peak quickly and then gradually level down, or is the demand steadily increasing? Oh, I see. In fact, it's the polar opposite. They take a long time to get going. Therefore, getting an ETF to be $10 million, $100 million is incredibly challenging. By the conclusion of their first year, most exchange-traded funds, ETFs, had assets of less than $50 million. Because of their lack of proven track records and liquidity, small exchange-traded funds ETFs are difficult for large institutions to purchase. A good comparison for Bitcoin ETFs would be the gold ETFs, often known as gold bullion ETFs, which first appeared on the US market in 2004. They achieved remarkable success. $1.5 billion came in their first year, and everyone thought it was incredible. However, $3.3 billion came in the next year, followed by $4.6 billion and $5 billion before reaching a high of almost $19 billion in the seventh year. Most exchange-traded funds ETFs follow this pattern of steady annual growth for around 6 years or so before leveling out. This is accelerated by slow-moving trains. I also believe that will transpire with Bitcoin. We are going to break $20 billion, if not $30 billion. I predict that next year will be even more spectacular. The Bitcoin ETF, in my opinion, will follow the same pattern as all the others. With the purpose of preserving value, it's also true that, gold ETFs didn't exist when they first came out, but they've since become popular, much like Bitcoin is now becoming popular after first being a niche asset. In my opinion, that makes the comparison fair. Finally, we can discuss the factors that have contributed to the rapid growth of Bitcoin ETFs. I believe it's because we waited a whole decade for them, The process of acquiring them was lengthy. Not to mention the fact that Bitcoin has been, without a doubt, the world's most successful asset for the past 3, 5, or 10 years. Therefore, it stands to reason that investors will like to allocate to it. While this is not shocking to me, the magnitude of the success is nevertheless enormous. The long-term themes are what actually concern me, not these insignificant one-time issues. The most notable development over the past 3 months is the shift in Washington's stance on cryptocurrency, which has evolved from being extremely critical to being neutral or even positive. Plus, I don't believe that price has been factored into the market. My prediction is that by the year 2025's conclusion, we will have reached $100 billion. Given what I'm witnessing in the market, we might end up surpassing that. The 4-year cycle has not ended, in my opinion. I believe that way because my understanding of the factors that influence the 4-year cycle differs from the general public's. The halving is seen by most to be its driving force. The halving is completely unrelated, in my opinion. Economic drivers of a more organic kind are likely to blame. Booms and busts are a part of any economy. There is expansion and contraction. After a growing spurt, the market hits its limits due to excessive investment. When you're in the midst of paying off debt, a recession hits.